$4,793 a month. Let that number sink in for a second. That's not rent. That's not a luxury car payment. That's what a working family of four was just quoted for basic health insurance coverage. And before you think this is some rare case or a mistake, listen carefully. This is not random, and it's not an error. This is happening because of decisions being debated in Washington right now, and those decisions could directly affect what millions of families pay for health insurance starting in January. If you're on Obamacare thinking about enrolling or helping a parent or spouse with coverage, this matters to you. What you're about to hear could explain why premiums are exploding, why insurers are sending shocking renewal notices, and why families are being forced to rethink their entire budget for next year. Before we break this all down, take just 1 second and support SSA Senior Insight by tapping subscribe. We cover Social Security, Medicare, health insurance, and real financial updates that affect everyday families. Subscribing helps you stay informed before changes hit your wallet, not after. And trust me, the next few months are going to matter more than most people realize. Now let's talk about what's really going on. Right now, Congress is in session during what is essentially its final meaningful window before the holiday recess. What happens in this short period could lock in health insurance prices for January and beyond. And at the center of this situation are the enhanced Obamacare subsidies, the extra financial help that has kept monthly premiums lower for millions of people over the last few years. Here's the key point most people don't realize. These subsidies don't slowly fade out. They don't decrease gradually. They are scheduled to end automatically at the end of the year. No extension built in, no safety net, no grace period. If Congress does nothing, the assistance simply disappears overnight. Lawmakers have already tried and failed to fix this. In the Senate, Democrats pushed for a multi-year extension of the enhanced subsidies. That effort didn't get enough votes to move forward. Republicans offered an alternative that would replace subsidies with health savings accounts. That failed too. So right now, there is no approved plan sitting in the Senate to stop the subsidies from expiring. That shifts all the attention to the House of Representatives. The House is preparing to vote on a narrow healthcare package. But here's the problem. That package does not include a full extension of the subsidies. At best, it may allow a separate amendment vote that would temporarily continue them. Even lawmakers supporting that amendment admit privately that the votes probably aren't there. House leadership is focused on long-term changes, insurance rules, transparency requirements, and cost reforms that might matter years from now. But none of that prevents premiums from jumping in January. Some lawmakers, especially those in competitive districts, are nervous. They know what happens politically when families open a letter in January and see their health insurance bill double. That's why the amendment exists at all. But hardline Republicans oppose extending subsidies completely, and many Democrats oppose temporary or watered-down fixes. Meanwhile, the clock keeps ticking. Congress is just days away from leaving town for the holidays, and if nothing passes both chambers before the end of the year, the subsidies expire automatically. There's no pause button. There's no guarantee Congress would come back quickly to fix it later. That uncertainty is exactly why insurers are already pricing plans as if the subsidies are gone. And that's where Washington gridlock turns into a real-world financial shock. Families are being asked to choose health insurance plans during open enrollment while Congress is still arguing. Insurers can't wait. They have to lock prices now. So they're planning for the worst-case scenario. No extra federal help starting January 1st. Now let's talk real numbers because this is where things become alarming. Right now, roughly 9 out of 10 people enrolled in Obamacare receive some form of subsidy that lowers their monthly premium. That assistance is what makes coverage affordable for most households. Health policy analysts estimate that if the enhanced subsidies expire, average out-of-pocket premiums for people who currently receive help could rise by around 114%. That's not a typo. More than double. The exact increase depends on income, age, family size, and location. But here's what that looks like in practice. A single adult earning around $40,000 a year could see premiums rise by hundreds or even thousands of dollars per year depending on the state and plan. For households earning closer to middle income levels, around $60,000 to $75,000 a year, the increase can be far more severe. Analysts estimate that a family of four earning about $75,000 could see their annual premiums jump by more than $3,000 almost immediately. And for families just above the subsidy cutoff, the situation is even worse. These are people who currently receive help, but would suddenly lose it entirely. That's how someone goes from paying a few $100s a month to well over $1,000 a month. Or in extreme cases, several thousand. That's where numbers like $4,593 per month come from. For older adults under 65, the impact can be especially brutal. Under Obamacare rules, insurers are allowed to charge older adults up to 3 times more than younger enrollees. Without subsidies, someone in their early 60s can suddenly be facing $10,000 to $15,000 per year just to stay insured. This isn't luxury coverage. This is basic insurance. So why does this feel like it's happening all at once? Because for the past few years, many people were shielded from the true cost of their health insurance. The expanded subsidies were introduced during the pandemic to keep coverage stable during an economic crisis. They were extended later but never made permanent. That meant this cliff always existed. It just wasn't visible yet. Premiums looked manageable on paper while underlying insurance costs continued to rise in the background. Now that the subsidies are set to expire, the system is snapping back instantly. Insurers aren't easing prices up slowly. They're pricing next year's plans assuming the extra federal help is gone on January 1st. That's why families aren't seeing gradual increases, right? They're seeing sudden jumps that feel shocking and unfair. Nothing changed about their income. Nothing changed about their health, but the math behind their insurance did. And the timing couldn't be worse. Open enrollment is happening right now while Congress is still undecided. Families are being forced to make big financial decisions without knowing if relief is coming. If lawmakers had acted months ago, insurers could have priced plans with certainty. Instead, everyone is operating in limbo, and that uncertainty is being passed straight to consumers. That's why so many people are saying, I didn't do anything differently, so why is my bill exploding? It's not personal, it's structural. Now let's talk about what you should realistically expect next. Congress could still act, but if it does, it will likely be at the very last minute. That means many people won't have clear answers until after enrollment decisions are already made. If nothing passes, the prices you're seeing now are likely real, not placeholders. This doesn't mean panic, but it does mean being prepared. Read renewal notices carefully. Look closely at deductibles and out-of-pocket maximums. Don't assume prices will automatically come down later. For many families, this is the first time health insurance has felt unpredictable again. And that uncertainty is exactly what's making this moment so stressful. If this information is helping you understand what's happening, let us know in the comments. Have your premiums gone up? Did you receive a shocking renewal notice? Sharing your experience helps others realize they're not alone. And it boosts this video so more people see it. And please share this video with someone who might be affected. A spouse, a parent, a coworker. These decisions are being made right now, and many people still don't know what's coming. When a family opens a letter showing nearly $5,000 a month for health insurance and asks, what do we do now? That's not exaggeration. That's the reality many households are facing. Whether Congress steps in at the last second or not, the financial impact is already hitting budgets. And the question worth thinking about is this. If lawmakers wait until after people feel the full impact to act, how many families will already be priced out? And if your bill jumps before anything changes, where does that leave you? This is exactly why SSA Senior Insight exists. To break down complex changes before they blindside you. Make sure you're subscribed, stay informed, and we'll continue tracking every update so you don't have to figure it out alone.